Make him welcome, please, everyone.
Thanks very much, Chrissy. Well, to answer that, I've been signing off on each one of our presentations by ticker AR1 load up. Well, and as the saying goes, by the dip, I kind of had to practice what I preach. So recently, was buying some shares. Alrighty, so firstly, thanks very much for, everyone's been a long day, and certainly very appreciative of everyone here looking at our opportunity. The usual disclaimer. For those of you who don't know us, Austral Resources is located 120 kilometres northwest of Mount Isa, sitting right up in that really predominant copper and base metals district. What makes Austral different to a lot of the copper players on the ASX? Well, we're a producing copper cathode mine, and we are producing today. Together with our 2,000 square kilometre tenement package, certainly makes us a very unique and sound investment. With $23 million cash at bank as of March, and the fact that we're producing at nearly 1,000 tonne a month come July, August, to put that into a revenue stream, $14 million a month, we're a self-funding opportunity set to explode. When we listed in November, we didn't need to raise capital for infrastructure. A lot of this, what I'll be doing today, is more about videos showing you what we're all about as opposed to graphs and charts. This infrastructure here, valued at over $160 million. And to put that also into perspective, the lead time on one of these SXEW processing plant is probably 3 to 5 years. This is the Taj Mahal when it comes to processing facility. Here's our crushing and agglomeration circuit. We recently did a refurb on that as ANTHILL's coming online. We're currently crushing, I think this morning we did 7,500 tonne. So we're just starting to hit our straps. We have a 150-man camp up on site, and as of this morning again, 120 staff up there right now. So we're fairly busy at the moment. Austral, so going back to that sheer size and enormity of that infrastructure, you can see the real value in what we've got there. Key points to Austral. In January, we started a new mining campaign called ANTHILL. ANTHILL as a standalone, on current copper prices, will be about $500 million in revenue over the next 4 years. And we've got a four-pronged attack on our exploration on our 2,000 square kilometre tenement package. Again, so we are a self-funded exploration opportunity, and our focus is increasing our oxide potential to extend that mine life. ANTHILL as a snapshot. By way of background, so we listed on the 3rd of November last year, and our entire focus was getting ANTHILL into full production. Mid-November, we announced that TAROETS would be our mining contractor for the next 3 years. In December, we put our first blast through ANTHILL. January, TAROETS started mining, and on Australia Day, we hit the first of our ore body, which was quite patriotic considering we just listed on the ASX. We started hauling ore from ROM to ROM, so from the mine itself back to our processing facility in March. And we plated our first sheet of copper just last week actually, and come to booth 12. Yeah, booth 12, come out and have a look. You can see, touch 99% pure LME grade copper cathode. It's not a full sheet, it's too heavy, it's 50 kilos, so we cut that one back. So some high level facts on ANTHILL. ANTHILL has 40,000 tonne of LME grade copper cathode. In February, Austral signed a offtake agreement with Glencore, and we also did a $21 million prepayment. And I'll explain why that was so important and exciting for us when we get to our exploration stage. In a snapshot, on today's pricing, ANTHILL will do about $550 million in revenue over the next 4 years, with a C1 cost of 7,200 AUD. That's going to give us around $250 million free cash flow. And our focus is to really extend that mine life. So we've got a budget over the next 12 months of $10 million that we're going to really punch into the ground. I've got a short video here of the mining campaign. So a lot of people probably haven't seen how copper cathode is actually made. So I'm a visual person. I thought, let's do a video of it. So here's your ANTHILL mining lease. We've got two pits, the east and the west. So here's TAROETS currently digging up some ore, loading into the back of a CAT 785 dump truck. Each one of those dump trucks is carting around $20,000 worth of copper cathode. As it heads up to ANTHILL ROM, we're going to have around 5,000 tonne of ore sitting at both ROMs, just in case we have any mining delays. So we've got plenty of stockpile there. Here we are getting our quad roan trains loaded. Before that, I'll start their 44-kilometre haul back to our Mount Kelly processing facility. Now, one of the good things for us there is we've got a bitumen road the whole way. So come wet season, we're certainly de-risked when it comes to that. So each one of these road trains is carrying around $14,000 worth of contained metal. We're doing 40 trips a day. It's what we've just hit now, which is around $500,000 worth of contained metal shifted each day. From here, we'll get loaded into our crushing and agglomeration circuit. And this is the last time we physically handle it, because from here, it's all done through our conveyor belt system. So you can see it here getting crushed and agglomerated. Now what that actually means is it gets crushed up into a smaller size, and then it gets absolutely saturated with a solution. And the whole idea of that is that we're focusing on getting that copper to start leaching out of the ore body or dirt as quickly as possible. So here we've got about 1.2 kilometres of conveyor belt system, and this material then follows all the way along up to our heap leach. I think I said at the start, this heap leach is around 1.6 kilometres in length, and it'll hit our radial stacker. Now why this is important as well is it puts the ore body exactly where we want it. So our team have got all this measured out. They know exactly where it's going to go and what volume it's going to go to. From there, they'll set up another sprinkler system and it'll start putting that solution, you can see in the ponds there, putting that back up on top. What happens is it then leaches that copper out of the ore body and runs it back into our settlement ponds. From there, it runs through the Taj Mahal and we start processing it. So here you can see the robotics. Here's a sheet of copper. That's 99% pure LME grade copper cathode. From here, it will then get loaded onto the back of our acid trucks where it gets backloaded back to Townsville. We export out of Townsville. Once it hits Townsville, that product becomes the property of Glencore. Interesting fact, so we will recover 60% of the copper out of that ore within 60 days and 85% within 270 days. Now why that's important, I mentioned that we've just started crushing and stacking. That's how we ramp up so quickly in a revenue stream by end of July, August. ANTHILL timeline. I guess the two main line items I want you to take note of here are the fourth from the bottom and the bottom line. So the fourth line from the bottom, you can see in July we're ramping up to 800 tonne of copper cathode for the month. By August, we're over 1,100 tonnes. Again, back into a dollar sense, that's $14 million per month, or $500,000 per day. And the last line is that gross revenue in accumulation sense. So next year, starting from July, we'll do, depending on, clearly it's based on copper prices, we'll do circa 180 mil worth of revenue for the next 12 months, which is really exciting. Again, it really gives us that opportunity to really focus on our exploration now that we've got that rocking and rolling. Capital structure. AR market cap, I think we're sitting at about 210 million. Our forecast free cash flow, as I've mentioned earlier, over the next 4 years is about 250 million based on today's pricing. You can see here that executive and directors hold a large portion of shares and we're continuing to increase. So as we're allowed to, I'm certainly very excited to keep buying stock when we're sitting at these levels. Our top 5 or top 10 actually have been really great supporters since day one. And in fact, some of these guys have increased their holding as well. They've really come for the ride with us. So I guess that works us through ANTHILL. So that's our money. That's what's driving us. That's giving us our cash today. And our real upside and our sizzle moving forward is our exploration. So what I mentioned earlier, we've got a 4-pronged attack in our exploration. Thank you. Firstly is ANTHILL 2.0. So that's our area that has been relatively unexplored in and around our existing mine, ANTHILL. Secondly, is our key oxide targets. Now, we've got 120 in total, and I'm going to speak to 3 of those shortly. Thirdly, monetising our very, very large portion of sulphide potential. And fourthly is JVs and acquisitions. And I'll explain our Glencore JV that we did a couple of weeks ago as well, and why that's so exciting for us. Again, I mentioned earlier, we've got a $10 million budget for the next 12 months. And our focus is, our goal is to try and hit 25,000 drill metres. So we're going flat out with all our planning up on site currently. Timeline, I'm mindful of our time. This is a busy slide, but I guess what this is telling you is that we're really kicking goals, and the fact is that we're running our 4-pronged attack parallel to each other, and that's why this prepayment from Glencore I mentioned earlier was so exciting. It enabled us to start this now, not have to get cash positive, not have to bank all that cash and then start. We're up it now. ANTHILL 2.0. So we also had an announcement earlier this week that we've recently got a new exploration manager, Ben Coots, and he's already he's got boots on the ground, and he and his team are full noise. ANTHILL 2.0. So the blue outlined areas are those 2 pits that you saw in the video, so the east and the west pit. The pink area is the ore body. The key points to really note are to the north, northwest and the west. So there's structural corridors and mineralisations there, and there's been no exploration done when they did this. Our predecessors did nothing out in that area, and this has the team really excited to focus on that. So that's our first step. Phase 2 is increase. I mentioned earlier that our plant's only running at a third capacity, so we're really focused on finding some more ore to feed the beast. We've got to get more ore as quickly as possible so we can start cranking that up. And with over 2,000 square kilometres in our tenement package, with 120 target areas, I'm certainly very excited about what we've got moving forward. Some near-term drill targets. McLeod Hill. Now this ore body, I've seen some results on some of our other guys that have presented. They're not high-grade ore opportunities on what we've got. But the key points for us, it's volume. It's getting feed into that plant, and very close to our processing facility, and on existing MLs. That's the stuff that really excites us, because that's a here and a now that's we can turn into cash. So McLeod Hill's one. Dividend is a lot larger. It's within 2.5 kilometres of our processing facility. Next slide, thanks mate. Dividend prospect. So here's one here. Here we are on Dividend, the one I was just touching on. So we've got 3,000 metres planned to go drilling in and around Dividend, and we're open in both directions, which has certainly got the exploration team pretty excited. Sulphide focus. I mentioned we've got a very large body of sulphide. So we've got 330,000 tonne of contained or JORC inferred mineral resource. Now keep in mind we've had no value attributed to that to date. Our previous owners, whenever they were oxide miners, whenever they hit sulphides, they stopped drilling. So our first initial process is get more drills going and really prove up that resource. And I think we'll find that we'll have a lot bigger body there than at first thought. We've recently entered into a trial with a US-based company called Jetty Resources. We've just taken, just got our samples out on with those guys. Now they've been able to figure out how to treat sulphides using our existing infrastructure. Now, if we can get this to work, that is an absolute game changer. Firstly, we've got a lot of sulphides. Secondly, all the overburden, oxides, have been removed, so they're virtually exposed. Our mining costs will be reduced. And I mentioned earlier that our capacity, our plant's only running at a third capacity, so we can certainly be able to increase that. I guess at the end of the day, if that does not work, we'll also then look at the opportunity of raising funds to go down the traditional route in a flotation plant. Lady COLLEEN. So Lady COLLEEN's the first of our sulphide target areas. What's got our guys really excited about this, it's open each direction, but it's also got the ability for us to open pit mine. So we're currently re-optimising based on a higher cut-off grade, and we've had some really high intercepts at over 4%. So this will potentially lose some tonnes to it, but will increase that cut-off. So there's certainly, there's a drilling campaign happening there right now. It was originally only drilled at 500 metre intervals. So our first step is to infill drill and then shorten back to a 50 metre step out. So our drilling's already started on that. Flying horse, I won't touch on that because it's just another great opportunity that our guys are working on how we can monetise some of our sulphides. JVs and acquisitions. I announced 2 weeks ago the next slide, thanks mate. This is a really busy slide, but I'll draw your eye to the yellow area in the centre. So what we've got is 300 square kilometres of our EPMs. The key points to note, any oxides within our existing EPMs remain entirely ours, not Glencore's. Any sulphides found, we'll get 35% of. Glencore are going to put $6.3 million into the ground over the next 4 years, and that's certainly very exciting for us. Key points, just quickly, it's only based on future findings, not existing. So we haven't given away the farm, don't worry about that. Takeaway, we're producing, we're cash positive, we've got 2,000 square kilometres in some of the Australia's best base metals area, and we've got a team that's really focused on extending our resource. Done. Ticker AR1 load up.